Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The AI arms race, Alphabet ups its spending plans, which means we're going to trade that name as well as the other key movers today. The rally extending its record run. Joining me for the hour, Josh Brown, Jim Lebenthal, Malcolm Etheridge, and Kevin Simpson. We will check the markets here. As I said, the record run, the S&P and the NASDAQ extending that. Today, we're focusing on our headliner, which is Alphabet. Stock's not doing all that much, up 1 1/3% the last I saw. Earnings beat, as you know. CapEx up $10 billion, $85 billion. Search was the key metric. They beat by 2%. Jim Lebenthal, I mentioned on the air yesterday the call that you made the day of the Eddie Q sell-off. The stock is up 25, 26% since that day when you said the sell-off was overblown. Can we put the search fears, if you want to call them that, to rest?
For now, yes. But I think we've also got to put context to it. We're not saying, and I'm certainly not saying, that this is a monopoly anymore. It is not. What it is, though, is a competitive race in which Google has a good position. There are, of course, people who are going to Perplexity and ChatGPT and other things, and that will continue. There are people, and I'm one of them, who like the little AI summary that I get from Google, and I'm still using it. If that makes me a dinosaur, guess what? I think there's more of me out there. But I also think, Scott, that this is more than just search. This is obviously a company that has a very good services business in the cloud infrastructure that it's building. YouTube is hitting on all cylinders. I wish Waymo were having more of an economic impact, but maybe that's just a matter of time. Overall, I continue to say that this is a stock that's undervalued. The multiple earnings estimates are going to go up here, so we're probably looking at 15, 16 times next year's earnings. Yes, there is competitive risk out there. I think that is overpriced by a lot in the current multiple. The one risk, I don't think this is much of a risk, is maybe next month we're going to hear from the judge in the DOJ case about what the penalties will be there. I think that is more likely to be a clearing event than a real downside risk. I think I like holding this stock here, and I think you can buy it right here, Scott.
Kev, what do you think? Can you buy it right here?
Absolutely, Scott. And I think if the DOJ does go against Google and they break the company up, that the sum of the parts are worth more separately than together. Jim, you're not a dinosaur. I don't use ChatGPT, well, for a lot of reasons, but I don't use ChatGPT on my phone. I'm almost exclusively Google. And even on my PC, probably 70% Google, 30% ChatGPT. And I, like you, think Gemini is going to come back into the picture, or at least enter the conversation with Perplexity, OpenAI, Claude, and the rest of them. So this is a stock that is still undervalued.
Yeah.
I think that we're missing the fact that the only thing that's keeping Alphabet in this conversation right now, the breakup would be great because I'd love to own YouTube as a standalone property. But the thing that's keeping them in this conversation right now is their AI tools on all of the Samsung devices blow anything Apple has right now out of the water. The moment Apple figures out a solution to that issue that they're behind, let's say they do buy a search engine powered by AI that is Perplexity or somebody else, we're not talking about what this company can do on the device anymore. And that's where everything is moving. The AI conversation is moving to mobile. And so I think it's unrealistic to think that they're not going to have this lull for quite a while they try and figure out how to cannibalize their business to get to a place of relevance again. So do I have to own this company right now? I don't think so.
Josh?
Just real quick, I like that there's a bear on this. I mean, that makes a healthy, for anybody who's bullish.
For like 2 years.
That's fine. I would be more worried if all of us were like, hey, this is the greatest stock ever. Yeah. That would worry me more than you're having a reasonable other side.
But that's a real well-articulated view about what the future could ultimately look like. You've heard all the opinions. What do you say?
I think Malcolm raises a really important point. I'd love to hear your take on this. Why was Google paying Apple $50 billion to be the default search engine on every Apple iOS device, iPad, iPhone, et cetera?
I mean, you're speaking rhetorically, right? It's to get traffic. I mean, it's to get eyeballs going to Google.
At that dollar amount, let's say the number again so people could process it. $50 billion. Do you think strategically that was important to Google?
Well, I mean, I'm not sure if this is where you're going, but that's a cost. And when I looked at the results, I was actually happy that those costs came in higher than expectations, because 2 months ago, you'll remember, you were here, Eddie Q of Apple saying, hey, Google search queries are going down. Not if you look at the traffic acquisition costs.
You absolutely had the right take that day. And I had recently sold Google, still not in it. I'd love an opportunity to buy it back. I do not think we have sufficiently discounted the longer-term risks here. Short-term, this was a great report. It was really not, like, if you're a shareholder, they gave you everything you wanted to hear, including we're going to raise our capex on AI. That's actually bullish. Nobody wants to hear about that.
I think you're right. I think that I like the take. I like the take.
They gave it to you.
It is bullish.
Yeah.
They're spending because they want to win it. They want to be in it.
Services revenue up 12%. Phenomenal. Great number. Google Cloud up 32% revenue. Phenomenal. This is if you're long the name, you needed to hear that. They also had some very positive things to say about the uptake of Gemini at the top of the search results. And they said actually young people are getting a lot of use out of that, which I'm not surprised by. One thing that I think helped the ad business is that the economy didn't fall apart. This is a highly cyclical company. They are in a duopoly with Meta. Amazon is a distant third in terms of the overall ad spend picture, and they need ad spend to hold up. They need the economy to hold up, and they got that. We actually saw a reacceleration in consumer spending at the high end, if you believe the government data. And Google coming out and telling you that is a confirmation.
Do I have to own Alphabet to get that exposure? If I want exposure to the cloud, I can go Microsoft. If I want exposure to search advertising, I can go Meta. Like, there's so many other alternatives that I could own.
There's no question about it, but of course you don't have to own anything. You don't have to own it. I think the more relevant idea is, do you feel like you're going to be punished if you do? Okay, you don't have to have this name in your portfolio. You don't want to have it if you feel like you're going to be, Jim, punished by owning it relative to some of the other names. Now, if you look at what probably is the biggest gift that you get is the PE of only 20 forward.
I totally agree.
So in an environment where you're worried about market share of their bread and butter business declining, it's not as if we're talking about a stock that is overly expensive.
Absolutely.
So that's the gift you get. If this stock was much more expensive than that, oh my gosh, the come down on a fear of search deterioration would be much more dramatic than it is now.
I so strongly agree, and I think that was central to my argument whenever I made it 2 months ago, is that it's simply too much bad news was priced in. You know, Josh, what you said, and again, I love that there's bears on the names here. You know, it's a reasonable, rational discussion, but there were a lot of things that went right here, right? YouTube, the cloud business, you know, it's not just search. Granted, you know, search is, depending on how you measure it, 2/3 to 3/4 of the business. So those other businesses need to grow rapidly, but I think they can. And there's a thought I want to express here is that when we talk about this capex, which is huge, right? This is huge, $85 billion. What I think about is whether it's good capex or bad capex. We're seeing in these numbers that there is a positive return on this investment that they're making. People of a certain age will remember the late 90s. Downtown Manhattan, every day the streets were being dug up to put in new fiber optic networks. And we found out by 2000 that 3/4 of those were dark, i.e. not producing any revenue. That's not the case here. There is a return on this investment.
It is, though, to what Josh said. It's a now versus later conversation. In the here and now, okay, things haven't deteriorated to the point of the greatest fears on the day of the Eddie Q sell-off. Will they, to a degree that makes you or gets you punished, as I said earlier, for owning the stock? We'll wait and see. But the capex spend, take a look at NVIDIA. Look at Broadcom, new record high. Where's the capex going?
The street is telling Google they want them to be aggressive. The reaction to the increase in capex spend, without question, the street believes that being a top 3 player in AI is an existential necessity for this stock. And that's what I think you're seeing playing out on the screen today. Had they just merely reaffirmed or said, yeah, things are good and we're going to leave things the way they are, I don't know that you get this upside result. The street really wants to see these guys spend as though they have to win the war, because quite frankly, to Malcolm's point, they do have to win the war.
Which is why I feel like, I want your take on this, the questions about return on investment, I don't feel are all that relevant yet. We ask them because we feel compelled to ask it. If you're spending X, you expect something in return for it. Well, maybe it's impossible to quantify what the return on that investment is going to be for another 5 years. I don't know. But why do we ask that question? I think that's the right take. You spend it, the street is rewarding you for the spend, not the reward yet. It assumes you're going to get the reward.
I would argue there is a reward we're not paying enough attention to right now, which is the revenue per full-time employee. If you look at Microsoft having something like 15,000 layoffs in about 9 months, and the fact that they become so much more productive that their revenue per full-time employee has grown, these companies are all chasing NVIDIA right now. NVIDIA is approaching $4 million per employee is what they're actually seeing in revenue. And the closest person to that, I think, is Alphabet with like 2.2 million per employee following, and then the others behind it, Microsoft closer to the bottom, and then Amazon includes, factory workers, so we don't really know what their number looks like. But that is the return. These companies are able to do a lot more with less, and so they're basically saying to their employees, do the thing that you are best at, the thing that you are most capable of doing, and then let AI do the rest. And so we're going to use this as an internal productivity tool first, while we figure out how we're going to monetize this to the rest of the world 5 years from now. So I think it's a both and, not a either or.
And when you think about where all of this is going, we can look at IBM and the shares being down today. They raised their forecast for their full year free cash flow, but revenue and gross margins in the software business were below. That almost seems like an afterthought in some respects. The stock had ripped into the number. That's number one. And then if you listen to the CEO of both that company and ServiceNow, how about this about the environment? Here's Arvind of IBM. I've turned from being, I use the word cautious optimism at the end of the first quarter. I would now turn my way all the way to optimism around the macro environment. That's IBM's CEO. ServiceNow's CEO, quote, I don't think the demand environment changed dramatically. I think the demand environment is wide open for AI innovation, i.e., we're going to continue spending. Others are going to continue spending. We're going to spend because the environment's better than maybe we thought it would be, and you have no choice.
We're going to move from the first half conversation around LLMs and things like Copilot all the way into hopefully, a consumer product, an agentic AI for the consumer or for the everyday employee at these companies and for customer service. And that's going to be, I think, the next conversation. It's already the current conversation in Silicon Valley, I mean on Wall Street. We're going to start to quantify the impact of agentic AI. And of course, like Alphabet's going to be a major player there. IBM is going to help companies implement this stuff. ServiceNow will be a beneficiary in 10 different ways. So I really think that as the conversation shifts into, look what Salesforce agents are doing, look what all of these companies are rolling out internally amongst their own employees. Why are they able to grow their revenue without adding the commensurate amount of headcount that we've seen in previous bull markets? That's going to be a really big piece of this. I think Microsoft has a really big role to play there. Obviously, my bet is Amazon is going to be agentic HQ for the consumer, having somebody help you shop or shop for you because you don't feel like it. Like, this is what's coming, and this is why the spend levels, I think, continue to be rewarded on Wall Street, even absent an uptick tomorrow in ROI. Street's willing to wait on the ROI piece because they see the revolution.
We, speaking of this conversation about AI, Steve Kovac has a news alert for us right in the heart of this conversation, Steve.
Yeah, that's right, Scott. So The Verge just reporting that OpenAI is planning to launch ChatGPT version 5. That's the next version from the current version 4. It's supposed to launch in August here, Scott. And we actually know a lot about what this is going to look like. It's not necessarily going to be a brand new version or new capabilities so much as a kind of melding together of all these disparate models that OpenAI already has. There was a tweet from Sam Altman a few months ago, I think it was back in February, we can show you, where he talked a little bit about what this is going to look like, how they're going to integrate their reasoning models and eventually stop selling some models separately and kind of jam it all together into this one big ChatGPT 5 model. Now, before that announcement, by the way, Scott, back in February, the expectation was this would be some kind of new super capable, a leap in advancement type of model. That seems to be taken back a little bit by that tweet from Altman a couple months ago, kind of resetting the expectations around this. Nowhere near that super intelligence or artificial general intelligence or whatever you want to call it that we've been talking about so much. And this is also happening as OpenAI and Microsoft are negotiating their agreement about what that AGI looks like in the future. And of course, Microsoft gets to tap into the technology before most other tech companies, Scott.
Hey, Steve, it's Josh Brown.
Yeah.
We're using the term reasoning a little bit tongue-in-cheek because
Right.
none of these models are carrying out anything that could scientifically be termed reasoning.
Sure.
They're all still word calculators. They are predicting probabilistically or statistically what the next likely word in a sentence should be based on, I guess, swallowing Reddit whole every day. But like, we're not at the reasoning stage. I think what people are excited about in ChatGPT version 5 is a lot of the things they're trying to do, moving, for example, turning tables into a graphic. Doesn't really work very well. It's a little bit of hallucinating when they try to do things like that. It really seems like this is more of an iterative update versus like, oh my God, my mind is blown. I can't believe it can do this. Is that the read you have on it?
Yeah, that is exactly the read I have. And like I said, before that February tweet from Altman, Josh, that was the expectation. You know, from version 3 to 4, that was a big leap. There was a lot more capabilities and things like that. They've really diminished the expectations around what version 5 is going to be able to do. It's going to be nowhere close to this AGI thing that we keep hearing Sam Altman and his peers and colleagues talk about so much. We're not even close to that right now. It is going to be interesting to see also just where Microsoft plays into that, and also how the plans change up too. There was some talk in that tweet. We only showed you a chunk of it, Josh, but they're going to be changing up who gets what in different paid versions of ChatGPT as well. So if this does in fact launch in August, so we've reached out to OpenAI, by the way, to find out if this is true. It'll be interesting to see how they shuffle up those paid plans, what they charge for what kind of features and so forth as well.
All right. Good stuff, Steve. Thanks very much for that update and the conversation around it. So we go from Altman, one person obviously right in the heart of the whole AI conversation, to somebody else who is as well, wants to be even more. We're talking about Elon Musk, because Tesla had its earnings as well. Top and bottom miss, auto revenues down for the second straight quarter. Musk saying there's going to be, quote, a few rough quarters coming in the near term. Autonomous is obviously the big bet. That's what, you know, Dan Ives would tell you, that with the stock down 8-9%, is that's the $1 trillion opportunity for this company in terms of additional market cap. You're not making the bet today on the, Kevin, you own the stock, on the drop in sales, on the issues around the brand, on what's happening with popularity in Europe, losing market share in that region for the 6th straight month. You've got growing competition. You need to keep your eye on the prize. That's what Dan Ives would tell you if he was sitting here. That prize is autonomous and AI
and robotics.
And the reward and robotics. And that's the,
and
as
Mars.
he would say, well, he would say that's the $1 trillion market cap opportunity from this point forward. You say what?
I mean, here's what's great to see. The companies that do really well get rewarded. We just had a great conversation about Alphabet and how they hit on every cylinder, even if it's for short term, the stock's being rewarded. I don't think you could have expected anything better or worse from Tesla. It was about as bad as we feared. But for the shareholders who are in here, exactly that. We're not looking for this as an automobile company over the next 3 months. It's can they deliver on full self-driving, autonomous vehicles, robo-taxis, and robotics. And that's something that we're going to find out several years into the future, much like we'll find out if search is really a death meld for Alphabet, which I don't think it is.
Can you make a fundamental case today to own this stock?
I cannot, Scott. I can't. But the one thing, when you talk to Bran or you talk to me, we can write covered calls against this. There's tremendous volatility in this name. So when it's down under 300, you can buy a little bit. When it's over 300, you can write calls.
You cover on a day like today?
I would not when it's down, absolutely not.
You would not?
I wouldn't be covering today. If anything, you can add a little bit here. But if you see it get back up into 310, 320, you can write 350 calls all day long. And I think you almost have to do that because this is a multi-year story before we find out if they're victorious or not in this pursuit.
Free cash flow, 146 million. I think they were expecting $1 billion.
It's not that much money when you think of a company like this.
If this wasn't Elon Musk, what would the stock be doing? Down 9 or down 20?
It depends on the day, because when you think of the political stance, it's detrimental when you have a CEO that's this involved. So I think that you have a polarizing character that works for you in a huge way when it works and against you in a big way when it doesn't.
Treating this like a car company, though, solve their problem short term, right? They haven't refreshed the body style in 10, 15 years. Rolling out a new one would immediately get people interested. The robo-taxi conversation. If my Tesla can go out there and earn money for me for 8 hours while I'm at work, I'm immediately excited about owning that company. If the battery capacity was 2 times better than anything else out of there and could get me 400 to 500 miles of range, all of these things are car company issues. And so realistically, they should be trying to compete with Ford and General Motors, not talking about this being an agentic AI company. That
the most notable thing they gave us on cars was a Model 2, which will be cheaper than a Model 3 to compete with the new Chinese cheaper EVs. I didn't really hear much else about refreshing the lineup.
As a long-term General Motors owner, I shudder to think, and I know you know this, Malcolm, but if this thing got valued as a car company, it's down 90%, and I'm being generous. And that can't be the thesis for anyone who's long the
So near term, it could buy you time to get to the moonshots if you would focus on the things that.
No, what buys you time is the cult following.
That's it.
Fair enough.
That buys you time.
That's it.
What used to buy them time is selling environmental credits, and that business was down in half this quarter. They sold $439 million worth of regulatory credits. The same quarter last year, they sold $900 million worth. You want to know, like, why the profit's missing? That's the reason.
51% drop in credits.
Well, that's the profitable part of the business.
Honestly,
the selling of credits.
They should do a snap offering, a secondary offering. They're mortgaging. That's a strong word, but they're mortgaging the other companies to pay for this. We've got SpaceX, which is the crown jewel of the Musk empire, making an investment. I'm sorry, is it in Tesla? No, it's in Twitter and XAI, but they're all getting intertwined. He needs some cash. 146 million of free cash flow ain't going to do it.
It looks kind of like a Japanese Keiretsu at this point, where like Mitsubishi Credit is stacked on top of Mitsubishi Motors, which is stacked on top of. So they've got
so they're start selling big screen TVs.
I mean, they have private market assets that they can use to raise additional capital through those vehicles, and then make investments from those vehicles into things that Tesla's working on. Think about all the levers they have to pull between XAI, which is the combination of the AI efforts and Twitter, and then the SpaceX thing. SpaceX has Starlink. There are all kinds of deals between these companies now. The shareholders seem to like it. They're raising money off balance sheet to make investments on balance sheet things, and it's really hard to disentangle. You just have to, I either believe in Elon Musk or I don't, and that seems to be the bet that people are making. At $300 a share, they still very much believe that he's going to pull this off.
Let me just mention real quick what you see on the screen. The IPO of McGraw-Hill opened for business. It did price below the range at 17. Not the greatest open for an IPO, especially in an environment, let's be honest, that's been pretty darn good.
They should have called it McGraw-Hill AI.
The most recent IPOs have been pretty much standouts. So we'll see. Early trade, obviously, but opening a little bit lower, again, price below the range. Back to Tesla for a minute. Tesla's pain is Uber's gain. Uber's up, what, 2-ish%? Why is that?
There's like this idiotic thing that happens with Uber stock where every time Tesla is about to have news or make an announcement, people get scared because they think like, oh, the cyber taxi news is going to hurt Uber. And then the stock ends up recovering, which is what's happening right now. So if you're long Uber, you've watched the stock double over the last 18 months, but you've had to live with that pattern, that kind of like uh-oh, cyber cab news, and then it doesn't matter, and then the stock recovers, and that's what's happening here.
I want to hit real quick, too, before we take our first break. I'm looking, let's show American Airlines, if we could, because they cut the profit forecast due to slow demand. Southwest also cut the outlook. I bring it up because let's look at Delta now as well. It wasn't down all that much. There's Southwest, which is down a lot, 12%. But you got to figure if Southwest and American Airlines cut their outlooks, it's going to have an impact everywhere. As I look at Delta, Jimmy, which is down almost 2%.
Yeah, I mean, the airline industry has clearly decided that there are two companies that are working. It's Delta and United, and the rest are being kind of left behind. Now, look, we know about Spirit and Frontier. That's really at the bottom of the barrel, but it's kind of surprising that American Airlines can't pick up the pace here. They have been laboring for years under a very high debt load that precedes the pandemic. They were buying back shares. They should have been buying back debt. Okay, that's water under the bridge. They've made many missteps in the past few years, including alienating their business customers. What I'm going at with this is I really think this is more of an American Airlines problem than an industry-wide problem. I do still track the TSA passenger count, and there are healthy flows. Yes, there are differences in who's paying how much for what tickets and who's flying to Europe or who's flying from Europe to the U.S., but clearly there is business to be had here, and the better two companies, Delta and United, are squeezing the profits from the rest of the airline industry.
Okay, so let's take a break. We'll come back. We have moves from Kevin, Josh, and Jim to tell you about. We have many committee stocks that are on the move on their earnings or otherwise, and we will discuss that when we come back. Plus, Josh Brown has his best stocks in the market list, a new name. Just made it. We'll tell you that, too. Okay, let's talk about some moves that we have on our desk today. Josh Brown bought more Otis worldwide. Why so?
Yeah, Otis reported yesterday, and it was slightly disappointing, but I really like this stock as at least an intermediate term hold. And I think the thing that was weak was the thing I care the least about. Selling new elevators, it's part of the business, but it's not the better part of the business. The better part of the business is the service and maintenance contracts. This is recession-proof. Cannot put skyscrapers anywhere in the world, install elevators, and then not have them serviced. Literally, it's illegal. Otis has a ton of room to gain market share in that area. So if you're selling this thing off because of slow construction in China, I think you're missing the best part of this story. Added to my position, lowered my average cost into the mid-90s, and I intend to hold it from here.
Okay, getting a bump. Jimmy, you trimmed Cheniere. Tell us why.
I've been trimming some of the winners in my portfolio recently. Now, to be fair, this has had a wobbly few weeks here. It's down about 10% off of its high. But it's had a great 5-year run. I've been in it for a long time. And my point here is not to time the markets, but I'm building a little bit of cash simply by trimming my winners and waiting for the moment to put that back to work in individual stocks. I just don't see anything today that absolutely demands me to put that money to work. So I've got now about 6% cash, and we'll see what the market gives me over the next few days and weeks.
Okay, Kevin, you wrote a call on Raytheon?
Yeah, we did this in advance of earnings on Monday, Scott. We did something similar with Netflix last week. It worked out for us. Sometimes you get heightened volatility going into an earnings report. We brought in over $5 a share for basically an at-the-money call. The stock was down about 5% on the open on Tuesday. We bought it back for 55 cents. So we netted a $4.78 profit in a few short hours. When the stock was all said and done, it was only down 1%, 52-week high today. So wish we had done it on IBM as well, but nice trade for an RTX for us.
Let's talk about some other stocks that are moving. Dow cut its quarterly dividend. Since you make your living thinking about and investing in companies that pay a dividend, what do you think about that? It's the second worst stock in the S&P 500 today. You don't own it, but you've got to have an opinion on it.
Yeah, just a little trade school, Scott. We haven't owned this in a number of years, but anytime a stock cuts or suspends its dividend, we remove it from our portfolio immediately. Usually you get enough headwind to get out of it before then. I think there were enough red flags that the dividend cut should come as no surprise. The last time we were caught where we actually had to sell a name was literally Disney during the pandemic. So I wouldn't be rushing into Dow. It's very negative, and sadly, if you own it, it's probably a sell at this point.
Chipotle, let's look at that one too, because they missed their comps. It was reiterated overweight at Morgan Stanley, but the stock's getting smoked. The Shake Shack and the McDonald's owners, do you look at this and have any concern whatsoever for what it means for broader trends in that industry?
So I don't follow this closely enough to have a strong opinion fundamentally. I do think the honey chipotle chicken is better than the original chicken. And now that it's a regular part of the menu, I have some confidence here. Let's put this chart up, though. Let's give me like a 5-year chart. This is a mess. Like, I don't buy stocks like this. It's just not my style. This stock has been making a series of lower highs dating back to, I don't know, middle of 2024. So like for a year now, it rallies, it gets to a lower high than the last high, and then it rolls right over again. And if the fundamentals are confirming the weak technicals, there are so many fish in the sea. There's 5,000 publicly traded companies. So this will set up. This will be a great buy at some point. I'm probably not going to be the one that spots that moment because I ain't looking at the 52-week low list in a market like this. I just can't spend my time on it.
Josh Brown, as we said, has a new stock on his best stocks in the market list. One that is hitting a new all-time high today, and it is what?
Oh, my God, you guys. Look at the chart of CBOE. This is, look, there are companies that actually thrive on high trading volumes and volatility. This is one of those names, and it's actually a shame that we don't talk about it enough because it's one of the best returning stocks from its date of inception. The IPO was the summer of 2010. Did about 850% versus the S&P 640% in the same period of time. What's happening at CBOE is really simple to understand. On July 3rd, they put out their June trading report. People are trading options to an extent that we have never seen before. Zero-dated options, yes, of course, the retail loves those, but just regular S&P 500 options, SPX, 3.7 million contracts. So volumes are going crazy. They're trading the VIX, they're trading the S&P 100, which is the OEX, and these are the products that traders are making use of, making bets in both directions. CBOE is a fantastic company, and this is one of the best charts in the market, and this is now one of the best stocks in the market. They have earnings on August 1st. There could be a little bit of a blip. So if you're looking for your entry, and they put out a report, and it's a sell the news reaction, and this name comes in a couple of bucks, that's probably the entry that I would look for as far as risk management. I would use 220, which has been support all year so far, or the rising 200-day moving average. But either way, this is an amazing name and should be on everyone's screen.
Other names in that universe that we should be paying attention to that might be benefiting from, if not the exact same thing, but
well, of course, Robinhood, which we've talked about a lot, and I mentioned
Kevin owns it. You own that.
I own Robinhood and I own CME for all the reasons.
Same phenomenon. CBOE is a little bit more concentrated in stock options as opposed to futures like CME, but same story. And then the other one, which we nailed it, IBKR. They came out with earnings last week. Another great report. They're adding new accounts at a record rate. And here it is. We picked this one at 59, broke out, hit about 64. This one's going higher, too. This one will follow Robinhood up. Trading is hot. It's what people are doing. Institutions and retail. Some are hedging, some are speculating. Doesn't matter. These companies are the gateway, and they're all raking it in right now.
All right. Let's do some calls of the day. We'll start with Palo Alto. Kevin, you own the name. Price target goes to 235 from 225 at Jefferies. We'll call it $200 right now. What do you think?
I totally agree with the call. Their net security ARR jumped 34% last quarter. Free cash flow was up by 25%. I heard a rumor on the desk that they're looking to possibly acquire Sentinel One. I can't confirm that, but
it was on the tape yesterday.
I think it'd be a great acquisition for them. If they surprise to the upside this quarter and they guide anywhere near what they potentially could, we may see it blow past that price target, Scott.
Okay. Spotify is the name that Josh flagged on May 1st for his best stocks in the market list. It was upgraded today to outperform $800. That's the price target at Oppenheimer. Many tailwinds ahead. They give you 6 different ones. Gross margin leverage, free cash flow generation, share buybacks, free tier monetization, and on and on and on. Malcolm, you want to take this one?
Yeah, I expect good things from earnings. Q1, they reported 12% year-over-year subscriber growth. I think that trend's going to continue. They're basically converting a lot of those free tier people into paid subscribers while also pushing into other territories. And so I really like the name right here. I think what we're seeing is investors snapping it up as sort of a 1-2 punch combo with Netflix. Netflix has kind of proven that the model works, and so we're seeing it similar to like a Visa, MasterCard kind of situation. So even with the stock up 50% year to date at this point, it seems like investors are loving it. Still got room to go.
Well, that's well put. Kev, you have it too.
675 million active users. They're rolling out their super fan version, and the free version with ads is unbelievable.
How did Apple let this happen? How did Apple let them get to 700 million users?
I use both products. They're interchangeable, but the fact is they own the space. Spotify blows it away.
Yeah.
See what this market does between now and then. Let's do some final trades. Gentlemen, if we could, Kevin Simpson, you are first.
I'm going to go with Honeywell. The stock is off 5% after solid earnings. They beat top line, bottom line, raised guidance. This is a sum of the parts story.
What doesn't the market like?
There's nothing not to like, Scott. Buy the stock.
Okay. Who's Digital Realty?
That's me.
Why?
Earnings tonight. Last time they reported nearly $1 billion worth of backlog contracts they're scrambling to fulfill. Should be a good night.
Okay. Applied Materials?
That's me. I don't think Google's news about more CapEx is an aberration. We're going to continue spending on data centers. We're going to need chips. We're going to need chip factories, and that's where AMAT comes in.
Okay. And last but not least must be Josh with Carlisle.
Hey, don't tell anyone. New all-time record high for Carlisle Group. Shout out to my guy Harvey Schwartz. This is in the right sector at the right time. It's moving.
Blackstone beat today too, didn't they? So private equity getting a bump. I will see you on the closing bell. We got a little work to do as the Dow is concerned, but we do have extended records for the S&P and the Nas.
Hey, I'm George. This is Blue Cloud Trading. That was Josh Brown and some other guests on the halftime report earlier today, July 24th, Thursday. It is currently 4:51 p.m. after the market close. And what we're going to do today is go over about 18 stocks and ETFs that were discussed on the show. Keep in mind, I'm not going to cover all of them. Some of the stocks are in the Blue Cloud portfolio, and I only share those with members. Consider becoming a Blue Cloud member, folks. Anyway, here's the deal. We're gonna look at the S&P 500, the SPY, the QQQ, the Dow, the Euro stocks, all those a number of stocks that they talked about, and one of Josh Brown's final trades. Tesla and Apple will be covered, as well as silver from one of our members' requests. And let's first take a look at the market. Let's see what the market's looking like now at the end of the day. Like I said, it's 4:52 p.m. And you can see that the Dow Jones was down 0.70%. It did not do so well today, right? So it gapped down, and then it's made a series of lower highs and lower lows. You can see those right there throughout the day, dropping 0.7%. The NASDAQ, it gapped up, gapped up to this level, and it kind of basically stayed around the same area. So you can see it was only up 0.18%. The S&P 500 was up just 0.07%, same thing. Here's the opening price, and there's the closing. So, and the Russell 2000, though, where it was really strong these last few days, down 1.38%. So that one gapped down and basically broke through that level. Then it broke through this level here. So it's a series of lower highs, lower lows there as well. Okay, downward channel in the Russell today. We still have one more day in the markets, so we'll see what happens tomorrow. But here's the heat map. Let's look at that real quick and see what stocks performed well. And you can see that it was NVIDIA up 1.73. Ironically, Amazon also closed up 1.73%. Tesla down to 8.20%. Healthcare stocks like UNH were down 4.76. You can see that right there. IBM was down 7.62. So there's a real mix here. And the stocks that let's look at the 1 week performance so far and see how they're doing. All right, you can see that Amazon, Google is up there. Eli Lilly's up 5.77. Interesting. T-Mobile, TMUS is up over 9%. And NVIDIA is only up 0.43, and Microsoft's down slightly, 0.16. Interesting. Now let's look at the groups, which is the sectors. And let's zoom in. And you'll see that technology today, communication services, and energy were the top three performers. Consumer cyclical, basic materials were the worst. Here's the 1 week performance and 1 month performance for you. All right, and 3 month if you want to see that too. All right, guys, let's get into the stocks now. We're going to look at the SPY ETFs. We're going to start off with that one first. Let's see. Let's make this chart a little bigger. There we go. Okay, still in a very strong uptrend. As I've mentioned, as long as we remain above that Tenkan-sen, things are still looking very, very strong for the SPY. It is up just 0.03% today, but a steady, just steady Eddie kind of trade right now in the SPY. You can see just a nice upward channel, nothing special happening right there in the S&P 500. The QQQ, same situation, right? Just kind of like moseying on. And one of the things I'm noticing, though, it is kind of getting stuck in a little bit of a consolidation stage. So if we get positive news, it should break through and then expand. If we get some negative news tomorrow or the next day, we might see a break under the Tenkan-sen potentially, and then it might come back to the next level of support, like it did in the past here in the Kijun-sen. The 20. So this is the 9 period, and this is the 26. What about the Dow Jones? That was down 0.69%. So yesterday, you see that it broke that high. Today, it gapped right back onto that level right there. Now, let's not forget also that price is under a level of resistance, 451.34. I am outside, so you might hear wind, you might hear noise. There's some people around too. So just giving you guys a heads up if you hear some background noises. All right, FEZ, the Eurostoxx 50 ETF, okay? And this one here, down 1.31%, where yesterday broke through that $60 level, that prior resistance from that candle. Now it's come pulled back, but found support at the Tenkan-sen again. So there's just a little bit of delay here as far as what's going to happen with the Eurostoxx. Of course, we're waiting until August 1st, right, for the tariff announcement of what's going to happen. What's going to happen with all these countries? Will there be any resolution? And then we'll have a better idea, and that will of course affect the Eurostoxx. Hopefully for the positive. I'd like to see the Eurostoxx do well. IBIT, Bitcoin is in a symmetrical triangle still, up 0.55% today. Just kind of stalling in this little triangle. Nothing major. Russell 2000 down 1.38%, but still above the moving averages. The Tenkan-sen and Kijun-sen on the daily chart. I do want to mention though that on the weekly chart, it pulled right back. It pulled right back into the Ichimoku cloud. So remember, on the weekly, we have to wait until Friday. So if price remains inside the cloud, it's really not a really bullish place that you're at with the Russell. So this is still has a lot of work to do. It's got to break through that level, and then we'll get some confirmation at least. Okay. The other thing is the Chiku span, that white line that you see in the background there, that's still underpriced, and that's also a bearish signal. Not to mention on the weekly chart, the Senko span A is still under the Senko span B. So we're using the Ichimoku indicator, and right now there's a lot of things just that need to take place here with the Russell before it can show its show strength really. Right now, I mean, it has showed some strength making the move to this level, but now the fact that it's stalling, okay, repeatedly, all these multiple weeks here, 1, 2, 3, 4 weeks in a row, right at the cloud. Very interesting. Let's see what happens. The VIX was up 0.13%. Let's look at the daily chart on that one. It's still at a 15.39%. It's 15.39 level, which is very low, and that's conducive to a very strong uptrend in the markets because the volatility's basically pulled back a little bit. All right, let's look at the CNBC stocks, the stocks that they talked about. Now, I flagged the strongest stocks that they talked about right there. It's a little blue flag, and these are the 5 stocks that, in my opinion, showed the strongest technicals. The rest of them are not quite there yet. Okay, some of them might be really weak. Some of them might be just slightly weak, and I'll explain why based on the technicals using the Ichimoku indicator. And remember, I'm not covering all the stocks that were discussed on the show because some of those stocks are in the members only portfolio. If you guys want to become members to access, especially when I go over the we're talking about over 40 stocks that I'll go over, plus giving over 20 stock ideas this coming weekend here. We're going to go into all that, and the way that you can access that, let me just show you guys real quick. You basically come to my homepage here. After you've subscribed, there will be a new button pops up. It says subscribe plus, and then you'll get this little, if you click on it, you'll get these 3 options. You would have to become a Blue Cloud trader and then hit the join button. to access those exclusive member-only videos. You can also become a Blue Cloud supporter, and I do appreciate all of you that have, but you will not be able to access those videos there. Only under Blue Cloud Trader and under Blue Cloud Legend level membership. Under Blue Cloud Legend level membership, you'll also get daily trade updates on all the stocks that are in the portfolio. And I used to post them in the what used to be called the community tab. I can't get this out for whatever reason. It is now under member. It will pop up under a new tab next to posts. It will say membership. Okay, and it will look something like this. All right, so you'll see that pop up right there. And then all you need to do, of course, is scroll down so you can see the different member-only videos that I've posted through, we've got a lot of videos in there over months and months of doing analysis here. Anyway, let's get back to the stocks. Okay, so CG, the Carlyle Group. Okay, this was Josh Brown's final trade today. And yeah, he's correct. I mean, this stock is taking off here. Broke through the $60.62 level. All right, that's an important level that was drawn here. I threw that on there back on, let's see, created back on July 10th. All right, so it goes back to, we're talking about back here in 2021. That's when this company stock was at that $60 level. The fact that we're breaking through it means that there is potential now for a continuation. My only concern with this one is the fact that it has had a really, really long run. As you can see from this point here, it's had this nice straight run up. Now, it could certainly continue for a little bit longer, but I'd like to see it maybe pull back a little bit. If it does move up some more and it pulls back and finds support at the 60, 62 and then bounces off that, it's going to be even stronger. Okay. What we don't want to see is parabolic. This thing go up like, unless you're, well, you do want to see it go parabolic and then exit the position and take the profits. But if it does do that, that's when you want to take profits right away. Okay. If there's an extreme exhaustion, they call it an exhaustion move. And so it just moves so fast, straight up. And then you want to get out at that point, especially if you see a long wick at the top of the candle. That's going to represent a shooting star. And those are really dangerous candles to hold a position into. DLR is Digital Realty Trust. Okay, and this one here apparently looks pretty good too. Now I had a position in this one a while back. I had added that back on November 7th of 2024, closed out November 29th for a 9.6% profit. Ironically, I did pick the right spot to get out because you can see right there, I shared all these trades, of course, with members, so they're familiar with this. But it actually dropped from that point. We're talking about a 33.5% drop in 4.3 months, and now it has recovered and it's showing a lot more strength. You can see that on the daily, and here it is on the weekly, also breaking above the cloud for the second week now. It's above it. Last week it closed above it. All right, it was finding resistance at these levels here. Now it's above that. I think this has potential. This is a REIT, by the way, a real estate sector REIT. Interactive Brokers also looking pretty strong. Here it is on the weekly chart, and here it is on the daily. Very strong chart. By the way, maybe you don't know this, but this platform right here, TC2000, you can actually trade off of this, if you wanted to, for example. They have, you can see here, they've got brokerage. Okay, why trade with TC2000? Let's click on that for a moment. Let's see what pops up when we do that. See how it says IB Smart Routing? That's Interactive Brokers Smart Routing. So they have partnered with Interactive Brokers on this. Okay, so we're back on the chart now. So yeah, I like this stock. It's looking great. RTX. Here's a stock that I had a position in, which I added back on May 19th. Added when it broke through that level of 136.17. Held it for quite a while here until July 18th, and you can see I closed out there for an 11.3% return. It had developed a reversal type candle, and I wanted to take some profits there. It did drop from that level. From that, when I got out there, it did drop another 5.07%, but then it basically rebounded. It's now moving back up. We do have a reversal candle, a negative reversal candle today, down 0.81% for the day. So this is not a proper entry spot, in my opinion. Okay, so I would not be adding a position here quite yet in RTX. But overall, I like this one. If you look at the daily, it's still a very strong uptrend, and so is the weekly level. CBOE. And by the way, those are the only types of stocks that I look for, are stocks that are strong on both the weekly and daily when I'm entering the position. So CBOE is the another stock that Josh Brown likes. And yeah, I mean, I agree. This is up 2.14%, a very strong uptrend. The Tenkan-sen, the 9 period, has held this nicely here throughout this whole move. And from the time that it actually broke through the moving averages right there, for example, it's up over 8%. And since it broke through the cloud over here, or it opened up above the cloud, it's up 12.08%. So that's a very nice, strong trend that this is in. ADX is still moving up. That's the momentum indicator right here, the white line. And the green line is moving up. Red line is moving down for the directional movement index. We have it at a setting of 9, which is different than the traditional setting. And it's moving up beautifully. I like it. Nothing negative to say about CBOE. Now, this is where we get into the not so great stocks. Well, they're good names, some of them, okay, the majority of them. But keep in mind that the technicals, and their fundamentals might be great, but their technicals aren't looking particularly great, like Honeywell, for example, which, as you can see today, dropped 6.18%. It was looking actually quite bullish even yesterday on July 23rd. If you look at a weekly chart on this one, that big drop has pulled it back. Now, it came close to this 242.77 level going back to 2024. All right, and then so it's reversing. This is why I talk about why it's important to look at those levels. Where was price in the past? Let's take a look and see where we might hit our head. You can see that we did hit our head here in this area. It came close to 242.77. It pulled back. It moved up a little bit more, did not have enough power to continue its move up, and then today, boom, dropped. Next earnings are going to be October 23rd, down 6.18%. Nothing to do here on that one. Spotify, this one's pulled back a bit, but finding support at the cloud. This one might bounce. It was up 1.03%. You see a nice reversal candle after that pullback there that led to this little pop-up, but it's still under the Tenkan-sen, so I would not be adding a position here. Palo Alto Network, this one here has had a nice move up, but the faster moving average currently is under the slower one. And so I would not be adding a position there either. CME, okay, on the daily chart, we've got a bearish future cloud. That's the Senkou span A under the Senkou span B. That's not good. Price is, in fact, above the cloud and above the moving averages, but that's very bearish right there. And then if we look at the weekly chart, okay, it's still under the Tenkan-sen on the weekly. Look at how many weeks we've been under the 9 period. 1, 2, 3, 4, 5 weeks. So I would hold off on this one, guys. CMG, Chipotle Mexican Grill, is in a downward channel. Look at that big down day, down 13.34% on the weekly chart. Here it is in the daily. It gapped right under the Ichimoku cloud, and it is not looking good. But it's probably, it's coming close to some support levels down here, these lows. All right, and it could potentially reverse, but I would not be adding positions when a stock is in a downtrend. You're really taking a chance in a gamble there. The Dow Inc., which is chemicals sector, not looking good either. It basically dropped through this low here, closed under it on the daily chart. High volume. Look at this. The negative DI is above the positive one. And when you see, by the way, when you guys see this, let me just show you something else. When you see the ADX white line moving up while the red line is above the green line, that means that the momentum is increasing, but not in a positive way. Okay, it's increasing to the downside. So I think that there's some trouble here. Let me, one area I will say you might want to, if you happen to be holding a position in this. It did seem to stall at that level. Let's look and find out what that low is there. The low is 25.06. Wow, isn't that interesting? Check that out, guys. It actually closed at 25.07. So there's a low. And it stalled right there. And in fact, there was just a slight bit of buying happening at the end of the day there. Look at the 5-minute. Just a little bit of buying up there. Look at the volume increasing. Again, not enough data here. It's a short little, we're talking about 20 minutes of buying. It could have been people shorting the stock and then just closing out their positions, essentially. And so that helped to push the stock up. So you can't really put too much emphasis into that. But it did, in fact, find a support level. This might be the low, potentially, for the Dow. After this huge drop from $60, I mean, the thing has dropped about almost 60% since these highs. Otis, okay, Otis Worldwide. This one was looking good last week. I mean, I'm sorry, not last week. This week, it was looking good on Tuesday, July 22nd. It was just kind of stuck in this little consolidation box right here. But all consolidation boxes, they're important, because if you see that price breaks under, okay, and it did here on yesterday, it had a big drop. Now it seems to be recovering a little bit. It's up 0.80% today. But, looking back, I mean, it even broke through that $90 level. So it's still under that. That's not a bullish scenario to be in. And look at this, ADX moving up while the negative DI is above the positive DI. So stay out of that one. DAL is looking weak. It closed under the 200 right there. Do you see that on the daily chart? So that's not good, but it's under, and it's under the Tenkan-sen. It's under the 5673. On the weekly chart, it does look more bullish. So Delta Airlines could potentially rebound based on what I'm seeing here on the weekly chart. All right. Whoops, sorry, I take that back. I was looking at a monthly, folks. That's a monthly level. Let's look at the weekly. The weekly is, in fact, weak. It's inside the Ichimoku cloud here on the weekly, and here it is on the daily. So no on Delta Airlines, okay? I look at both just the weekly and daily to make my decisions. If I was just using the monthly chart, I'd say, oh, this looks pretty good. You could certainly go up to those higher time frames, right? Because you can use Ichimoku on any time frame. But if you're trading like myself, a little bit more active trader, then you want to consider just using those two time frames for your decision-making process. Southwest Airlines is LUV. This one dropped a little bit under the Kijun-sen, down 11.16%. That all happened today. Here's a weekly chart for you. Under the 200, came back under. So, we've got a declining 200 day. Sometimes that will happen. Price will pop above that declining 200 day like it did over here, and then just come right back under. So until this thing stabilizes, all right, we need to see stabilization of that 200, maybe moving sideways. I wouldn't be jumping into this one. AAL also still dropping the 200. It's under the 200, under the cloud. No on that one. ServiceNow is inside the Ichimoku cloud. I wouldn't be adding a position here either. That's the weekly chart, and here's the daily, still inside the cloud, but above the 200 day. All right, we got Applied Materials here. AMAT is the ticker symbol. You can always find that ticker symbol up here at the top. Next earnings are going to be on August 21st. It's in between the two moving averages, so it's kind of an equilibrium state right here. I would not be doing anything until it pops above the Tenkan-sen. Here it is in the weekly. It's still inside the cloud too, so no on this one. IBM had a big drop, 7.62%. Got into the Tenkan-sen on the weekly. Here it is in the daily, inside the cloud. No on IBM right now. It just broke through so many levels. As you can see, it even broke through that level right there temporarily. Luckily, it did close above it. So if we look at that low right there of this candle, the low was 25579. Let's go ahead and add that in there so you can, as a reference point. All right, you can see how it found, in the past, it found resistance at that level and dropped. Once it broke, it came back, found support here and bounced, came back, found support and bounced. And it's come back to that 255 level and bounced with a nice hammer. That's a very bullish candle, even though it's a high volume and it was negative. Red candle here on the volume bar. The negative DI is above the positive DI, and ADX is moving up. I do like this candle. These can be the initiating, candle that starts a new move back up. But I would hold off on adding any positions here. Okay. Let's look at the Tesla. These are the stocks that are not in the portfolio. Tesla is inside the cloud here on the daily chart. It dropped 8.2%. Remember I was talking about this? I said this still under that trend line yesterday. Would not be adding here. Okay. Here it is in the weekly. Dropping back under that cloud. No thank you on Tesla. For now, Apple in a downward trend. under the, well, it's actually inside the cloud, but it's also looking pretty weak. Nothing special here on the weekly chart. Here it is on the daily, more bullish. I suppose Apple, if I had to pick between the two, I would go with Apple over Tesla here, but I would not be adding it. And then silver, SLV, has been looking pretty good here. It's been in a nice strong uptrend since it broke through the cloud here back on May 13th. You know, it's up over 18%, and it looks good on the daily chart. I like it. Here it is on the weekly chart, very strong. You know what I haven't covered for a little while is gold. Let's look at GLD real quick too. GLD on the weekly chart is inside a box. Okay, I think it's being contained, waiting. It's just waiting to emerge. You know what's going to cause this to blow up, right? Or to pop. It's going to be the tariffs on August 1st. The tariffs, you know, announcement that we're expecting. That's what's going to be the catalyst, I think, for gold. That's what's going to be the catalyst for the stock market too, by the way. So that's a really important date, guys. August 1st. Put that in your calendar. And that's going to do it for this video. Hope you guys enjoyed it. If you like what you see and you want to support this channel, don't forget to subscribe and like. And remember that if you guys also like the software that I use here, the TC2000, that you can get access to that with a $25 coupon. Okay, here's how you do it. Once you're on my homepage here, you can click on this right here. It says, I'm sorry, I take that back. You click here where it says and 9 more links. Okay, if you click on that, it'll bring this description up. You scroll down. Okay, it is right here. $25 coupon for TC2000. Click on that link right there. By the way, my Twitter page is here too if you want to check that out. But you do that, click on that link, it will bring you to this page. You enter your email address in here. You can download it for Windows if you have the Windows laptop or Windows computer. If you have a Mac, you do need to download Parallels in order to download the downloadable version of TC2000, or you can use the web-based version of this by clicking here. So as I mentioned, you'll receive a $25 coupon towards your TC2000 service courtesy of Blue Cloud Trading. Please note your email will be shared with Blue Cloud Trading. And to be eligible for the coupon, you must have had TC2000 service in the last 12 months. You should not have. I'm sorry. You must not have had TC2000 service in the last 12 months to get that $25 coupon. So if you're starting off the first time, you'll get it. Now, here's the pricing information. You could, you know, here's the monthly level, silver, gold, and platinum, different levels here. So you could technically use the silver for a couple of months for free, right? I would recommend, though, going with gold. If you want to be able to draw on the charts, if you want to add alerts, if you want to actually plot fundamentals on your charts like I do, drill down through the sectors and industries, you can do that only through the gold and platinum. I have platinum, but I'm a much more active trader. They also have real-time, you know, data feeds here if you want to add that for an additional $10. So if you're a day trader, you want to definitely have, you know, you want to use that. They have Bloomberg videos you can add for $1. For example, Yahoo Finance videos for $1. Extra alerts, you can pay for the alerts by, you know, whatever that is. And yeah, that's it. And by the way, if you also switch it from month, you know, paying month by month to biannual, you can save a lot of money. $22.49 drops it from $29.99 a month for gold down to $22.49. So that's a pretty good deal. And for platinum from $59 to $44.99. Okay. All right, guys. Thanks for watching. I will catch you all in the next video.